Okay. Good evening, guys. Ken at Tortoise Capital for the strategy report for, let's see, April 17th, 2020. Still early innings of this COVID. Don't get cabin fever. Wash your hands and stay off the beach. Deal with it. Be an adult about it. We got to get through this thing. We need you. So let's start off where we were yesterday. Where was that today? Let's see. Yeah, so this is where we were yesterday. And what we talked about was this region in here. This is where I want to try to zoom in. Let's see if I can do this without exploding. Yeah. So one of the things that we talked about was was this notion that there's no real resistance up in here. So the real resistance is this level right here, and it was the 10-day high. And it had like 1, 2, 3, 4 runs at it, and it had lower highs these last 3 days. And so at the same time, you have this rising dragon here that's sort of putting a time pressure on it, and you have the rising RL30 that wants to get out of the river. And if we extend the river down, we get this. So we got this cluster coming in here in this circle, and what we said was this, it's got about 3 days or so to get through all this. It's got this time window to either fish, we might say to fish or to cut bait. I mean, there's a possibility it could stay in this tight cluster here. But really, there's this time pressure coming on. You can see that's one of the advantages of that PSAR, is that that also puts a time compression on this thing. So that was the nature of the discussion yesterday. Okay, and so we said if it could get above that 10-day high, then there's no resistance up in here. There's no resistance up in here, and it could get up to, the Z1, or I'm sorry, the Z2, the fair value long term, the 30-day high, and then the Z3 is up in here, and so it was really breaking through this. So last night there was some news that Gilead Sciences had come up with maybe some good treatments, and so the futures markets looked really strong, and there was a big pop up today, and there was a lot of enthusiasm, and I was really interested to see what kind of close would we have on a Friday going into a weekend in which there would be a lot of discussions. And while we were looking at the possibility of this upward move, we also were respecting the possibility of this downward move, that if it violated this belly of the dragon right here, that we would be concerned, and then you could have some more of these moves downward here, and that could be problematic. So that's why we were looking at these next couple 3 days as critical. We were on the one hand in a bear normal condition, so you got to be really cautious on the downside. On the other hand, we've had 2 really good legs up. We had this strong move up, pause, and then a second leg up, and now it's kind of been pausing. And now are we going to get a third leg up, or are we going to get a third leg down? That's really the nature of this time sensitive. And it had a very tightly compressed range yesterday. So that puts us in that kind of frame of mind in which we've got this doji action and the market's in a critical state, so we've got to be postured to respond in either direction. So that was the context for the day. So then what we got was this. Is we had a nice gap up, and it finished better, and so it broke out above the previous high and made a new 10-day high. So it's already into this zone where there is no real resistance. So based on any news or discussions from the weekend, I would expect Monday to be even more strongly postured for this kind of upward move. Today was a vote of confidence to hold over the weekend. Okay. So that all feels good and proper. So let's get our little analysis tool out here. So today was also still a relatively narrow day in terms of range, but when you add in the gap up and the fact that it held it, it had a really strong run into the close. I'm going to show you that with the UDOW trade. We end up getting the 1-day range here, then adjustments to the 10-day range, high and low. That's why that's a strong positive move to break out above and a strong negative move to break down below. And then the 30-day high comes down a little bit because over the last couple days, this used to be the 30-day high, and now it was here, and today it's right here. So the 30-day look back for resistance is here, followed by fair value, C3, and then a return to the all-time high is just right there. And so we're only at about 15% sell-off from that all-time high, and we're about 35% off the swing low. So the 1-day, 10-day, and 30-day ranges. Support to the downside, really skin of the dragon, middle of the dragon, skin of the dragon. Now I would call it the Bollinger Band mean and the southern skin of the dragon there. The 10-day low, the belly of the dragon, the belly of the 10, and the 30-day low. So that's that price ladder on the way down, and you can see the price ladder above. But I really think there's an opportunity in here to see some sharp moves at the start of next week. We've gone winter, spring, through a tough spring, and now into the summer. So we have a long side bias based on that MACD 0 line. Today's scores. Start off, the S&P closed with a 2.7, plus 2.7. What was better? Real estate, the Dow, McDonald's, materials, U.S. steel, timber, Mexico, small caps. So one of the ways to look at this relationship is IWM to SPY and then to DIA. So when the Dow 30 uber mega caps, the industrials, are better than the market, that's people buying U.S. large caps. And then when the small caps, IWM at 4.4, are better than the S&P at 2.7, that's the shorter term tactical traders that are adding juice. So that's good. Home Depot. Now listen to all the ones that got smashed earlier this week, and there was a nice rebound in the sell-offs. Cliff, Financials, Simon Property, Wynn, Chevron, Alcoa, Energy, Devon Energy, and Boeing. These were all the big losers from yesterday. So one of the characteristics of these bear markets is that the intraday opportunities to buy things on sale and to exploit some of that intraday momentum is always there. So you always want to know going into the day, who were the big movers yesterday? And from those extreme conditions come extreme results. If a guy was an exceptional winner or loser yesterday, that means there was a lot of people emotionally involved in the winning and losing of that trade. And so that means there's still probably some residual emotion in there. And our job is to find the mover. You hear that, Joe? Find the mover. That's some of the symbols that you were working on are the movers. So we're not talking about groovy tech stocks here. We're talking about Boeing, Devon Energy are moving 14 and 15%. That's even half again as good as Gilead Sciences. That's the guys with the coronavirus medication. And look at them. They are monthly spring, weekly summer, and daily summer. So I've added them to our stack of in-play symbols. But these were all the symbols that got smashed yesterday. And then all of the ones down here are the ones that were big gainers yesterday. Apple, Silver, Walmart, Tesla, Wheaton, they all underperformed that S&P stack. So what else underperformed on the sectors? Euro-Asia, Cisco, Brazil, emerging markets. Healthcare gave a little bit back, although it was still up 2% for the day. Tech, oddly enough. Aussie dollar, treasuries, silver. So that was our stack. And now notice most everything is now in daily summer, only a few things in the spring. Treasuries have already rolled over into the daily fall. And just a couple things now in daily winter. And that was those inverse plays, VIX and SDOW. Things that are in the weekly summer, these are the ones that have the early strength still. VIX and treasuries are still having some residual gains. That's a reminder of the power of the bear to turn around and bite you. Just because he's walking off to go to sleep in his cave doesn't mean he won't turn around and bite your head off. So let's keep that in mind. Okay. Quick look at some extracts from the daily report. This is the one we talked about yesterday, the 1 day pop, the squeeze. So today was another day where the ranges were very narrow, and then compared to their 10-day high, these are all the symbols that test out really well for mechanical swing trading 1 day at a time. And so there's some good symbols in there that we might want to pay attention to. Walgreens, Home Depot, Disney and Cat, Coke and SPY. SPY itself is 3.5 to 1 to its 10-day high, using today's range as a marker for risk. So that's interesting. There's the Russell and Tech and Diamond. So the whole market itself has kind of given back the volatility and is now allowing us to conduct more normal looking trade framing and opportunity taking. So that's kind of what this is right now. Excuse me. The only chart that I want to walk through right now is the afternoon opportunity trade in UDOW. I want you to go look at on the speed run. There was some intraday stuff where I took a look at what Joe has done, and we're going to take a look at what Glenn did on a coaching project that he's working on. So we're going to get a chance to look at a bunch of other standard trades. And those were useful, I think, because you're getting a chance to see other guys applying these same techniques with some pretty good results. So this is in the afternoon. My brother and I were doing a family Zoom, and so we were looking at typically looking at UDOW, and it had recovered. It gapped up and then pulled back and then recovered and then gave us a really tight SQC and a super pinch here at about 115, 130 Central. So a super pinch. That means two things have to happen. Number one, all of the regression lines have to be tightly clustered together. So you'll notice that the RL270 and the RL90, let me zoom that in even a little further if I may. So in a super pinch, two things have to happen. All of the traders have to agree on what fair value is. And I use the moving regression lines to represent the fair value of 4 different time frames. So here's the RL10 is that blue line. You can see him. That's the current trader's, the aggressive trader's current price. The RL30 is the slow member of that pair, and here he is stuck inside the river, inside the Z3 lines. And here's the RL90 that has moved up into here and then rolled over and flattened out. That's the green line. And here's the RL270, the last guy to the equation. Now he's come back in. So now what we have is all 4 of the regression lines are tightly clustered together. And that means that for that one shining moment, they all agree on what the fair value is and the real current price. At the same time, we also have the absence of volatility, that we have this sideways quiet channel that has become so sideways and so quiet that in this highlighted yellow square, we're really only talking about 30 or 40 cents of compression. So we're in less than a frog box, and it's sideways, and all the regression lines are in here. That's like an acorn of potential that's going to grow to be an oak tree. That's also, a coiled spring, if you will. That should make you, as Mark Twain said, something like, that should make you as nervous as a long-tailed cat in a room full of rocking chairs. So there's our super pinch has now happened inside this long sideways quiet channel. That's 45 minutes of tight compression. So here we go. VWAP collapse and PSAR flip, so we get short. This could be, what's the argument? Why? Well, maybe it's just profit preservation on the gap up gains. I don't know. The RL10 rejects the VWAP and down it goes. I don't mind the RL90 as a pretty good stop in here, that green line. That's not bad. Or you could use the Z2, or you could use this PSAR. That's fine. I don't mind the RL90 on 1 minute charts. Covered. It was in the afternoon. I like to get paid. Ring the bell. So now what I've done also is I've taken that Z3 pinch range and moved that across, and that's like from 53 to 53.30. So that's only 30 cents of width. And what I've noticed is that sometimes this is not only resistance, but it can also be support. Richard asked me, do I use a trailing stop? Yeah, I'm using like the RL90, and you'll notice that was an RL90 exit. The other thing I just noticed too is you got an RL10 excursion. The RL10 did not really make a new low. The next one didn't really make a new low. It had come down to the Bollinger Band mean and the RL90. And so this is a fractional gain. And I don't mind getting paid on that. But yeah, it's a trailing stop. We get a rejection of the RL270. Doesn't even get to the VWAP. The RL10 rolls over. The Dragon rolls over. So I just re-enter the short position that I just got out of about 10 minutes earlier. So we get short again, and then this is going to collapse. And then you'll also notice down here that this short happened when we went into the winter. And it stayed through the spring, and then I got out as it came out of the Red River and was coming up to test the summer. This one rolled over and rejoined the winter again, so this became like a rejection of summer and returned to the winter. Richard asked, Can a trailing stop work well with the current volatility? It's a or is it better to do the dollar amount? I like dollars in hand because that's what you can spend. I like R capture, but I also like dollars in hand, and I'd rather get paid than not get paid. And I can always re-enter like I just did. That doesn't hurt my feelings whatsoever. I got out because it didn't feel like it was going to collapse, but then the recovery, which would be the opposite case, didn't happen. And now I've got a short side bias because everything is rolling over and going down. So yeah, in the current volatility, what I'm gonna suggest to you is that the RL90 and the Bollinger Bands and the VWAP, all of those are measures and affected by volatility. So they adapt to the volatility that is actually there. So when you're talking about volatility, I could say at this moment, there's not much volatility at all. Look at the last 40 bars. Look how tightly compressed the Z3 Bollinger Bands are and how sideways. There's no volatility right there. Now, what's implied is the potential for big moves, which is implied by the size of the ranges of the last 30 days. But even the last 10 days have really featured a decline in volatility. So we know that's true because when we look at our daily report and look at the Z-score of risk Z, that thing has been pointing to a continuous evaporation of volatility as the market has climbed its way out of the trench. So at the same time, the size of the daily ranges compared to a 2-year average, it still feels volatile. So when you say in this current volatility, I want to address with some precision, and I want you to think about with some precision, what's the volatility that you care about and which volatility are you comparing it against? What is the short-term volatility versus the long-term volatility mean on your time frame? So for me, on these tactical trades, it's really the width of the of the two red lines from Z-3 to Z+3. That's how much volatility there is. That's why I can say with confidence that this is a Z3 super pinch, because the width of the Z3 lines are so narrow as to be abnormal and remarkable. And the unusual condition that all four regression lines are also tightly compressed in here. This thing is the absolute absence of volatility. And that's why I'm interested in it, because when it does break out like a coiled spring, it has a lot of implied power into it. So anyway, here we are. Back into the second entry short. Or not second entry, but the re-entry short. And I get paid again. The same amount of getting paid as we did there. This time it dug a little deeper and started coming back. And again, it was testing the Bollinger Band mean. So I just say, let me just get paid. I know how to get back in. I know how to reverse. So let me just cash it when I got it. A bird in the hand. Now I want you to notice it makes a low, a high, and now a higher low, and then starts to take off again. Instead of coming back down to test lower, it gives me this PSAR flip again, and it takes out the hump of the RL10. So on the basis of that turn, so now I have a low, a high, a higher low, and I buy my position to go long here. And I'm targeting, the first piece is the back to the VWAP and the RL270. And my second target would be, can it get through the that price congestion zone that we noticed all the way back here, that Z3 line that we drew all the way across. So let me just draw that all the way across. Can it get through there? At the same time, we're noticing this green line, which I've now drawn as red, right? So that's where we're getting long. So now what I'm interested in doing is, now I'm going to have one position on this thing until it can get through and break out to the upside. That's my hope. If it gets above here, I want to be long with money in hand, and getting a second position in somewhere around here would be nice. And my risk is really just down here. At the PSAR flip, the belly of the RL10, because I'm not going to stick around in here very long. You can see that I've been quick to take profits, quick to cut them, fairly quick to switch it. So this is like anteing up for each next hand to see if there's anything that, see if I can get cards. So we're long one. That looks promising already because the RL10 now pushed through the VWAP and the RL270. It couldn't here, and it couldn't here, and it couldn't here. So that's 1, 2, 3. Each time it was a lower hump with respect to these longer term measures of fair value. But this time it gave me a higher low, and this time it pushed through. The pullback was contained inside the dragon, and it didn't violate the PSAR, and now pushed up through here again. This feels really good. It rejects the top of that zone, and now it takes off through there again. So I add the second position. Now off it goes. Now, just in terms of routine management, right here, my stop should either be here at the PSAR, I wouldn't be offended if you were at the 2-bar low. Either one of those is fine. And that's going to lock in a really nice gain on 2 entries. And you can see right now that we are, compared to this entire lunchtime period, we are free and clear. It makes an amazing run up, but you know, we're in the last 15 minutes of the day, so all I'm doing on this one is just running this up, running it up, and try to cash. And then it makes a Z3 excursion way up here. It makes a push, and then the second higher push, and then comes all the way back and cash. So I feel like I get to keep half of that really amazing move in the last few minutes. From here to here, I get to keep half of it right there. And then the rest of the day just kind of trails off. So if we're looking at this, just looking at this last set of these 2 trades, this one enters like 52.70 and has about a 20-cent stop, so call it 30 cents. So it enters at 52.70. It gets out at 54.60. I'll call it 54.50. So that is 52.70 to 54. That's like $1.80 on 30 cents. That's 6 execution R from here. From here to exit there is 6 execution R. This one is probably another 3 in that afternoon. My brother only played the 1. He didn't add the second position in, but he netted 5 out of all of this. So it was like, we just called that the little engine that could, in his words. It just kept going. So that's, you know, think back to what I said just before about volatility and, you know, the implied moves. Even with this nice run at the end of the day, this is still well within a range stat move. It didn't even make a range stat move today. So it was still a narrow range day, but you can get a really nice intraday directional move and then cash it, and then I'm not sweating over the weekend because this kind of opportunity is going to continue to happen in both directions as long as the market is in this bearish normal conditions. It's not even bearish volatile. That's how much volatility has come out. All right, so that's that. I was talking with some Army officers today about their research project on 3D printing and how it's going to revolutionize Army supply chains. So, got to continue to help the nation. I'm going to cover the weekend reports here in a second, but I want to shift gears, if I may, to share some ideas from Glenn. So here's what Glenn did, and this is why he's a black belt. He'll say, "Oh no, I'm not." Yeah, you're a black belt. Glenn has been to the research weekend a couple times and defended his ideas in public, double-blind, peer-reviewed, not double-blind, but peer-reviewed, and has suffered through being in front of a camera and exploring his ideas, warts and all, and just getting after it. And he's bringing his systematic yet creative mind as a professional musician, and a damn good one, to his trading. So I had written something about that Talent LMS when I find this is, God, it seems like so long ago, but on April 9th, God, that's a week ago, I said, I just realized that I got this gold mine of stuff that we just need to exploit. 20,000 trading charts, 10 years of trading, live workshops and all that stuff. So I'm going to turn this all into into that Talent LMS structured series of courses. In the week that's gone on, I've built out over a dozen courses and started that structure to get it going. I've called it the Examined Life of a Trader. And I really like this. The focus courses on specific systems are now in Talent LMS. So like I pulled out all of the owls and the RLCOs and the sideways quiet channels and all that stuff, put them into their own little clusters of courses. So the focus courses on specific systems in Talent LMS is useful. So here's what Glenn said. Glenn said, "Hey, I'm just catching up on the volume of material you're producing and spotted this one, and it's in line with what he wants to do at the moment. I've enjoyed seeing your marked up charts for years." And he says, importantly, "I think there's a great deal that can be learned from examining your charts." I agree. "I'm considering printing off blank unmarked charts for myself to mark up by hand and compare them to how I actually trade." So he's going to do two things. Trade them, but he's also then going to mark them up outside of the market and looking at it from almost a dispassionate observer's view to really focus on the application without time pressure or the pressure of a live market, to really focus on getting the rules right. And then comparing three things. What he did with how he marks it up with his scholarly mind, if I may say it that way, and then comparing it to the charts that I do, to look at the delta between those three sets of performances. I'm thinking of Glenn. I can remember the first time that I was able to hear the difference in classical music that a performer made, and it was in a Vivaldi's Four Seasons concerto, and I understood finally the difference that the artist and the conductor make in interpreting the music. And once I heard it, I just couldn't. It was either that one or the Mozart horn concerto. In fact, yeah, it was the horn concerto. And I remember that like it was yesterday now. And finally being able to compare three different approaches to the same structure was just very liberating for me. And so that's what I see him getting ready to do. I think it would be easy over time to generate a set of charts that test decision points and allow you to practice and reflect on the discretion that goes into a decision. And I think that's how you balance your intuitive mind when you're playing the music and versus when you're studying the music. I imagine you go through your charts for music sometimes note by note, other times playing by feel and intuition and sight reading and soul. And then I think you probably bounce back and forth between those two. I may be wrong, but that's what it feels like. So he's going to make a diligent effort to mark up his own charts now. And as he started thinking his way through that last week, he felt like he was reviewing a homework assignment from a high school math class. Which did I get right? What did I miss? What procedures did I follow correctly or not? And helping him look more at the process than only the result. I'm slowly cataloging market conditions where I tend to do stupid things so that I can see them sooner and stand aside and do the proper action. And then there's the smallest hint of possible presentation topic for the summer. Oh, it's more than a hint. You're already well along the path to the research weekend black belt test, another black belt test for you. So that's what he said on Sunday. So I said, I'll go through and see if the ones that I've coded as blank in the past were truly blank. I think they are. And if I have an after set, because I think when I go through, a lot of times when I do this, I'll set a blank, then I'll do one that has a bunch of blue numbers on it by the steps to give people as quizzes, and then I may record a solution to it or show the actual trading. But so I've gone through a number of those. And I also say it's the single best way I know to develop proficiency and confidence. And so I sent him a set and said, yeah, here you go. A couple days later, here's a set that will get you started. And so the 6 or 7 that I sent him were the ones from this week's one of the strategy podcasts. I want to say Wednesday night when I did the 6 intraday price patterns, and all 6 were different kinds of movers. Some were straight up, some were straight down, some were choppy, some were reversals, and all that stuff. And then this is a chance to see how on the same day you can get such a diversity of price action and to see how your rules stand up. And then I said, hey, or Glenn said, great, I'll send them to you once he marks them up. And I said, okay, on Friday, this morning at 1:15, I said, hey, I went through all the case studies on the Thursday night podcast, and I have my set marked up, and I'll send it to him when he's ready. And so his point was, his solution today, this afternoon, this is at 5:45 Central Time. So a couple hours ago, Glenn says, hey, attached to my markups, I'll have a look at your video, see how I did. He was talking about the estimates of R that he had made, and then some overall thoughts. Cliff is not really his primary because it is so inexpensive that the stops are so tight that he probably wouldn't trade it. I trade it because I've been trading it daily for years, and so part of this is getting your mind right and your psychology right, and knowing your trading vehicles and building up that sense of confidence. SCO and SPCE have their own characteristics, and then both of those charts were useful to clarify or reinforce the rule not to trade during the lunchtime chop until you see a Z2 breakout. So don't be in such a hurry to get chopped up in Crocodile River. And then notes on his general process. He was observing the utility of MACD. He talked a little bit about his entries and his entry rules, and basically how he was approaching the rule set in here, and what his basic ideas for the initial stop were. So very simple rules. This is like that visual box trading. And then very simple rules for his exits. So he was noticing his setup and filters with MACD, one line entry for entries, stops, and exits. So it doesn't have to be elaborate. And then this one, really important, talking with Kim Anderson, she said, and that's why she's so smart, she told me to make sure that I have my rule set written down, including where I employ discretion and how. Marking up the charts will give me a clear rule set, and I'll keep doing this for another week to hone my skills and try to capture as many different situations as I can. So I went through his charts, and then I said, hey, While you're waiting, go ahead and draw some provisional conclusions now about the process and the particular insights and share them with Kim and me. So I told him that at 6:46, an hour and a half ago. And then he said, oh, okay, here you go. And in 30 minutes, he found 7 lessons, a bunch of other learnings, and top-level conclusions from his study. Stops too tight, shifting from futures back to stops to increase span of control, waiting for the Z2 breakouts in the key lunchtime period. Lesson 4, only trade in the direction given by MACD. You don't have to get them all. Stay with the trend. I left a lot of money on the table by not exiting in the usual manner at the PSAR flip or the RLXD. Execution must be disciplined. Even if you know what you're supposed to do, you still have to do it. He's already brought the discipline into his system by the way he runs his daily reports. So he needs to now bring that into his world of execution. So if you think about planning, preparing, executing, and assessing, which one of those 4 areas do you need discipline in? Yes, all of them. Other lessons. I don't need many reasons for entry or exit. True. The one-line entries work pretty good. Simple is clearer, better, and faster. Genres. Other potential learnings. Now he's beginning to think, how do I compare it to Ken's work? He hasn't done that work yet, but he will. Not that, and this is key, not that he needs to trade the way I do, but it may be that when he plays his music his way, and he looks at the way I play that music, that somewhere in between there may be some more insights about the music, about the opportunity that gives you a deeper appreciation for what it is that you want to do. Doesn't mean you have to play it the same way. He mentions that while he was waiting for me to get started, he has already gone through the videos. Compare execution times for trades between investments. And can I manage all 6 at the same time? So we're talking span of control. Key insight here. It's really a way to build and establish confidence in trading practice. He has experienced long periods where he hasn't been disciplined. He attributes that to his improvisational side. His nickname and handle is Oz Improv. You think that's an important part of his music? Yeah. How long does the track record need to be to convince himself to reduce his fears? Focusing efforts on disciplined execution rather than results will lead to improved results. I agreed. Marking these charts is simply another way to remember that lesson and lock it in. Journaling and writing about it also leads to many advances. You have to get outside of the tactical assessment and lock those things in a top-level journal, the same way Marcus Aurelius committed to that in that castle up in Germany during the, old times, during his reflections. That's why Glenn is amazing. That's why Kim Anderson is amazing. She's got that figured out too. So I just thought that was some brilliant work. Yeah. Let me see if I can find that document. Just a minute. Let's see. I mentioned to him, hey, thanks for getting back to me. I'm going to quote the hell out of you. So thank you for being willing to share. So let's see if we can get these real quick. I just want to kind of go through his performance stuff while he's on the screen with us now. So this was the SPCE. I think I don't object to the early entry here at Virgin Galactic, but I do like to see a turning point at a bottom, and I kind of like to see what the wiggle. That's what Sonal used to call the wiggle on the RL10 to get a sense of the high and low. But that's but on the other hand, this thing might have just continued to go, so I don't mind it. But I love the exit, which protected you against that. Collapsing dragon short, reasonable exit. Collapsing dragon short, reasonable exit. That could be quicker. Pause. Z2 breakdown. There wasn't anything there anyway. And then two really nice captures. So even with struggling to get a little bit of traction, 1.85 net. WPM. Now notice the key. Quiz 2020-0417 WPM WGO. Now I know who it is from and date and all that stuff. So here is Wheaton, the breakout, 1, 2, cash. Try it scratch, try it fraction, pause, short cash, 3.8. What are your questions? UDOW, collapse, cash, owl, scratch, re-enter, cash, scratch, fractional loss, collapsing dragon and VWAP breakdown, bank, that's 5.5. SCO, emerging dragon, bank, scratch, pause, fractional loss, fractional gain, 1.25. Diamonds, collapse, bank, owl, cash, re-entry, second, beautiful, cash, scratch, 3. Cliffs, fractional loss, fractional gain, scratch, big win, 1.8. That nets out to somewhere around 15 to 17 of execution R captures. And if you want to net 2R a week, so you're going to get 200, you can get 100R a year, you can now see why you don't have to sweat individual trades with being too large. You can play it at a production level where you have a minimal hit on your emotional bank account so that you can trade and let the trade just be what it is. Don't try to maximize your position size on every trade. That's a young man's decision who hasn't experienced the long haul. Okay, weekend report review. Let's go to that one, if we may. So thank you so much for sharing, Glenn. That was some amazing work there. The people are grateful. So am I. Okay, so April 17th. Bearish normal, overbought on 3, 10, and 30 lookbacks. Still protected by BMR. These are the halfway through the month. The winners. Technology, healthcare, and the U.S. large caps. ETF2 is still safe. Risk Z has favored the long side, but notice this little rollover. If this were to roll over here, then we would have to be a little more cautious on our swing positions. Now there's no such thing as easy money, but if there were, it's already been made. So that's what that's telling us. On a monthly marker, look how much the market has rolled back and recovered from -4 sigma all the way up to, it's back over the Bollinger Band mean. That's the Ken Anderson regression stretch line, regression stretch, or the pattern 7 for me. It exceeds Z3, so you buy Z3 with a Z Z-score stop, and that thing is still working. Um, the Dragon has just rolled over. Long-term fair value, we're still back above long-term fair value, so the market is feeling pretty sanguine. Weekly, we've had 1, 2, 3, 4 pretty good weeks in a row. Halfway through to Dragon, approaching the Bollinger Band main and the PSAR flip on this side. So again, no such thing as easy money, but that's going to be, this move from here to here was easier than from here to there. How much adverse news would it take to make this thing come back and retest Z minus 2? I mean, that's still $40, and that's just a 2-week low. We were just there 2 weeks ago. Daily chart you've heard me talk through. Quick look at the blended monthly rebalancing portfolio elements. So the moving average signal is based on price with respect to the 4-month moving average. So in the 13s, everything except Treasury, only the Qs have moved above, and we're pretty strong this week. In the 22 ETFs, when we add the XL series, healthcare is above the line and has done pretty well. XLV is leading the way out of all the sector spiders, the way it should be, and was up 7% and outperformed the Qs. ETF 32, gold and the Qs are added into that stack. Gold gave up some gains. The bonds really stopped gaining, and some leading contenders now: tech, consumer staples, and consumer discretion. Is there any surprise? Consumer staples should be in there, and that has a lot of room to recover. It's still down 8% for the month, whereas healthcare is up 20%. So there's more room for consumer staples, XLP. Maybe there's more gold in that mine. It hasn't been mined out like the healthcare has. That's how I start reading that stuff. And look at consumer discretionary, up 6% and up 30% for the month. More room in that mine. Dow 30, still looking pretty healthy right there. Half of them are on buys. And then the leading candidates: Microsoft, Walmart, United Health, Johnson & Johnson, Intel, and Apple. No surprises. Things that have been smashed: Boeing, ExxonMobil, American Express, Nucor Steel, JP Morgan. Now, I've got Nucor Steel in there as a placeholder until we get... So Raytheon and United Technologies merged, and there's not a lot of data on them yet. So I've got Nucor Steel in there as a placeholder. It's not really in the Dow 30, but it's going to, because I want to compare that to U.S. Steel, I've put it in there just to get a read on it. So it's not quite the Dow 30. Sector spiders, biotech and healthcare. Why is that surprising? Not at all. I'll leave that for your review. Same with ETF Max. I'm going to leave that for your review. Shifting to market conditions now, still from the ETF2 report. All the regions of the world market model still on cash. That should read bearish normal, pardon me. S&P at 63 under the strength is still better than EFA at 55. So U.S. better than the world. Inside the U.S. it is tech, large caps, mid caps, small caps. Two strongest Qs in the S&P, two weakest Latin America and emerging, or Asia less Japan. Whoops. Sorry. In the sector spiders, energy smashed, financials and industrials lagging, technology leading the way, and then healthcare has really come along. That's actually the strongest sector right now in the ETF2 methodology. Treasuries in the broad asset class is still seen as safe, as is gold. Oil has just been smashed. as have commodities because of the slowing of the business cycle. So I still think there's a chance to buy some commodities as raw materials if you have a longer term posture. Now looking at the ETF2 through this lens, these are the strategy categories. So based on strength and consistency, the strength is like fast, consistency is slow. Current relative strength versus a 10-week average of relative strength according to our proprietary indicators there. And then these are all scored on a scale of 0 to 100. And then this, if it's like green and green, the assessment is it is great, remains great, and you should reinforce it with trend following techniques. And can you turbo it intraday and with shorter term, daily charts? Yes, you can. Why? Because the winners are continuing to win. If you had something that was green and white, it was good, meaning it was white, above average, and now it's green currently. It was good, now great. This is a chance to exploit new strengths. You can turbo it, and these are the new leaders, and so on. This is how you read that chart all the way down. The ETF liquidity, this is the combination of the 30 most liquid shares of ETFs as measured by average daily dollar volume of the last 30 days, and then their relative volatility. So the ones that are on this chart and in the green, like GDX, XOP, and XLE, are extremely tradable. Because why? They're very liquid, and their daily volatility is enormous. They're even more volatile than the Russell, which is at 4.78. Whereas the S&P, where is he on here? Spiders, where are you? Well, diamonds are at 3.3%. Oh, and there's a spider, 3.2%. And these are more than double the volatility. And the Russell is about 1.5 times. That's about correct. Notice that the intraday volatility of the Qs at 3.19 is even less than the S&P. Would you have bet that way? You would not. And the Russell is 1.5 times as volatile intraday as the Qs. That's why the Russell is such an excellent intraday trader. But there's other ones that are pretty good too. Look at Brazil and Latin America. 5% volatilities. And some people ask, well, why do you trade those? That's why. Daily report. You've seen the daily already. Just paying attention to the 10-day max pain candidates. Caution on the S&P that it's in an overreaction short, which means that this would be a place where if there was going to be a dead cat bounce, this would be a place that you would see it. When everybody's complacent. Remember, that bear can still turn around and bite your head off even though he's sleepy, so be wary. On the daily tactical, plenty of breakouts on the 10-day and 1 month. Caterpillar still 4.7 to 1. Dow and American Express better than 2 to 1 on the auto framer, so that's of interest. Handful of good dojis. In the ETFs, oil and gold are testing out well on the auto framer. Plenty of dojis. Plenty of breakouts on the 10-day and 1 month. Especially XLV Healthcare had the strongest move today on a relative basis. And it's the strongest sector in the S&P that's knocking on the door. Look how good XLV is at 2.67 Z-score extension. So it's already past the floodplain and ready to make a runaway move. Look how many healthcare and tech leaders are on that list. The ones underneath, the only oil is below its river. But these are the laggards. Most expanded pinch boxes, these are the ones that have been the most directional. The most compressed pinch boxes are the ones that have been the most sideways quiet-ish. So I like things like Microsoft and Intel that are gaining deliberately, but it still haven't exploded into movement yet. And I like that Walmart is there. The auto framer gives you mechanical framing data. The regression line fractal gives you longer term swing posturing based on a multiples of ATR versus the RL10 and the RL270. Listen to yesterday's extended discussion of that from the April 16th podcast on the use of the regression lines to figure that out. The squeezes I've talked. The MACD histogram 4 seasons, I've talked extensively about that. The multi-time frame NDX summary, all the ones in the bright green are ones that made breakouts from their look-back periods. And this is sorted by the 10-day look-back. So Procter & Gamble, Nike, Johnson & Johnson are the strongest on their 10-day breakouts. And look at the move Nike made at 220 and the Dow 30 DIA made at 233. A huge move up in the Dow that they were willing to hold over the weekend. Good to go. Silver and gold broke down. That's the only ones that broke down below their 3-day look-back period. And then look at Europe at a 298 on IEV, 298 on its 3-day breakout. Strong vote of confidence by Europe. And the rest of these are technical charts for market, deep market analysis. I just want to say, I don't say much about the ADX stat usually, but all of these ADX ratings, the Z-scores are so small. What that tells you is the lack of trendiness and directionality in the trends. It's the huge sell-off and then the huge bounce up has really ruined ADX as a guide towards indicators. Right. So that's everything I wanted to cover on the weekend report. Let me just get to the very last page. So the last 2 pages on the weekend is the expanded ETF2. This gives you that full list of the very liquid, the 100 most liquid ETFs using that green and white strength, consistency, and quality average. So the strongest is treasuries and gold. And I normally just show and talk about that top set of 10 or 20. But this will also give you the seasonality of all these things that have been smashed on the bottom, right? So that's that. So that's everything I wanted to cover tonight. Well done. The speed run and everything is already posted. The weekend reports are in here and on Patreon. I will get this video published and posted and hung on Patreon for you. There's a lot of goodness in there. I will probably I'm going to upload the coaching document for Glenn, or with Glenn, just so you can review the stream of consciousness and the mental states going back and forth between us and the professional approach towards learning, the long-term systematic approach towards learning that we're adopting. Now I just realized I'm 15 minutes late for my doctoral lectures tonight. I'm going to have to change the timing on that because I'm consistently late. So anyway, that's all I got for you tonight, guys. Well done. Great week of work. Get your steps in. Get good sleep. It's a marathon, not a sprint. Trust your judgment. Keep working hard. And we'll see you in the chat room. Take good care.